Welcome back to the C Morning Show. It's time for our business talk, and joining us today, equity analyst from Sukor Sekuritas, Zedekiah Diaz. Good morning, Joe.
Good morning.
Yes, thank you for coming to the studio. And let's discuss the recap of JCI last week and what can we learn from it for this week.
Okay, yes. So last week the JCI actually only closed green for a day. And then as a result, the GCI had to be willing to close in the red zone all week, actually, last week.
Just as you mentioned in our previous talk show.
Exactly, correction,
yes,
right?
Anticipate correction.
Exactly, yes. And then after staying at the psychological level, as we can see from this chart, psychological level of 7,300 for several days, the index was corrected again to the psychological level of 7,200 right now. And then last Friday, as we all know, probably the JCI closed at 7,295, depreciating 0.61% last week. So, and then this weakening on Friday caused the index to shrink 0.55% in total last week.
Okay.
So, and then this weakening of our index or the GCI is because of the selling actions, taking profit, because the market players think the JCF movement at the beginning was considered attractive, right, until it touched the all-time high level on an intraday basis. So this is what happened last week on our JCI.
Okay, so what are the sentiments or market drivers that we need to pay attention to this week?
Okay, yes. So there are several sentiments that we can pay attention to. The first one is the U.S. existing home sales data.
Yes.
This is a global data from the U.S. and this is one of the sentiment that overshadowed our index, right? So
why we need to pay attention to U.S. existing home sales data?
Yes. So basically, the home sales data measures the number of existing residential buildings that were sold than previous month. And this report actually helped to measure the strength of the U.S. housing market and is a key indicator to measure the overall economic strength of the U.S. I think if we go to the next slide, we can see the number. There you go.
Okay,
see?
This is the number.
Yeah, so this is the number, and we can see basically a higher than expected reading should be taken as positive or bullish for the USD, while a lower number than expected reading should be taken as negative bearish or for the USD. And so yes, it's green, right? So with this data, we can say the projection actually was in line with the release of this data, which experienced an increase in January. So in the previous one, it's 3.88, and then the forecast 3.99, and the actual number is 4.0. So there's an increase in January in houses that are being sold in the US. And then this increase in market players' expectations for the release is also caused by the interest rate, which tend to be lower compared to last year. And then another one we can also check is the China house price index. I think there's a next slide for this one. So basically, housing pricing index measured the price changes for the residential housing as a percentage change from specific start of date. And this is a little bit different than what we've been looking at previously in the US. So with the GCI, actually there's a pressure contributed because of this data, right? In line with the Asian regional exchanges because of this release of property data in China. So in its release of the National Statistic Agency for January 2003 last year, the housing price index was at minus 0.7% compared to the previous month, which was minus 0.%. So I think the market believe that this gives an indication that the property sector in China has not yet shown signs of recovery. And this decline in property sales will of course have an impact to the economy, considering this is sector is actually one of the pillars of Chinese economy. And then the question is probably how is this affecting the Indonesia market,
So
right?
it went to different direction. What happened in the U.S. and what
And then
happened in China.
Yes. So as we all know, China current situation and even next year could still put pressure to our country, especially because China is the country with the largest economy in Asia and Indonesia's largest trading partner.
Yeah, we rely more to China than to U.S.,
Yes.
right?
So basically what happened to them will affect us in a way, right? So for the record, the real estate or the related sectors in China, they contributed more than a quarter of China's income. So this housing pricing actually is very, index is very important to the economy of China. So the country's, China's good market that has big influence on trade between Indonesia, not just Indonesia, but also ASEAN countries, right? So China slowing down, this cause a slowing import demand, will cause demand for export from Indonesia to also slow down. So this is how the China's economy affecting our economy. Even they say the 1% economy slowdown in China has an estimated 0.3% impact.
Yes, that's
So
right.
this is what happened with China. But if we look at the domestic data, this is also another sentiment that we are waiting for. I think this is the inflation data. The investors tend to anticipate the release of our inflation data. It's on Friday actually, this week, right? This week, and then also I think we can also expect the release of some companies' performance data.
Earnings
Yes,
season still
Yep.
on.
Yeah, and then this will be one of the factors that will decide the movement of our index pattern for some time to come.
So how's the projection for Indonesia inflation data? Because we have experienced rising price, right?
That'll be interesting because I talk to Joshua, who will explain about the inflation in rice.
Yes.
It's actually the number is it's still in line with what the government is expected.
So we don't have to be too worried.
Yeah, we don't have to be worried about that. So I think in short term, the GCI still has potential for consolidation or correction this week.
Okay.
Yeah, because of the exchange rate fluctuations, which appear to be starting to improve, but I believe in the long term, the GCI is still in an uptrend phase.
In a long term. So
In a long term, yes.
This week we anticipate consolidation
Yeah.
or correction, yeah.
Yes, correction, but in the long term, it's still an uptrend phase.
Okay.
Yeah.
All right. So what sectors do you find interesting to look at this week?
I think banking sector is still interesting because of the Indonesian bank still holds the current interest at 6%. And then we can also be looking at property sector, right? Because the US, the Fed, they will cut the rate sometime this year, maybe not in the first quarter,
Yes.
but sometime this year. So this can be a fresh air for the property sector. We will get the impact in our economy, but I think this is for the long haul. But right now, I think this is just two sectors that can be we can pay attention to right now.
Okay, and for the stocks?
The stocks, I think for property, disclaimer on.
Disclaimer on.
Yeah, I think CTRA is one of them, and for banking, I would recommend BMRI.
Okay, BMRI. Okay, thank you so much.
No problem.
Zedekiah Diaz for sharing your insights as well as the outlook for market this week and all the important data that may affect our market.
Yeah.
Have a good day. Thank you,
Thank you so
once
much.
again for coming to our studio. And next, in the meantime, stay connected with us at See Today News on Instagram, X, and YouTube. We'll be back with more updates for you on C Morning Show.